Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Hey, Marty. Good morning. Marty, I'd like to see more of you here in TraderLab chat. How we doing in YouTube? I know there's a delay in YouTube. Anyway, thanks, Plato. Good morning, everybody, and thank you, Greenie. Welcome to the TraderLab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles, the chassis, and the intraday developing time frame. This is about the business of trading. This is really a serious community of traders that have come together to leverage their collective experience. It doesn't matter how long you've been trading. What matters is that we all have similar experiences in our development. It doesn't really matter. I started in 1980. Some of you may have started, 30 days ago. It really doesn't matter. But the more experience you have, the more you understand the frustrations and the difficulty of what we're trying to accomplish. And most of that is because we don't understand the business. And we don't understand how this business works. And what we're trying to do is fit it into our psychological needs. And that's a whole different conversation for another time, but these are the things that we are always working on in the TraderLab community. It's because in the end, no matter what you do in this business, you're trying to fulfill the psychological need. That is to be right, to predict, to have confirmation, all the things. And they're really wrapped around the need to avoid risk. And the need to avoid risk is primal. It is not just, I don't want to lose, which nobody wants to, of course. It's really about, I don't want to die. And that might sound extreme, but the primal wiring was about survival. And that means perception of risk released hormones and chemicals in your brain. And those chemicals were great for survival. Well, in this business, we are actually embracing risk or seeking risk to create edge. And it's completely counterintuitive. Now, when we talk about intuitive, it's deeper. Isn't intuition different from consciousness, right? So intuition comes from another place. It comes from our brain, of course, but not at a conscious level. It's coming from a different place, and that is really more primal. Now, whether it's instinct or whatever, in trading, this is not a business of instinct. It's really a business of statistical probabilities and randomness. So in a random environment, you're always triggered with fear and you're looking for certainty. I don't want to do anything until I know it's safe. Well, how can you solve for safety, which is what most of us try to do? What we need to do is solve for randomness and a way to manage our fear. And it's okay to be fearful. You're not here to be stoic and non-emotional. You can't do it unless, of course, you get a lobotomy. But that's probably not something you want to take on in order to have an opportunity in this business. So if we are emotional beings, then we have to understand those emotions and how they interact. And it's happening in all parts of our lives, as someone posted this morning in TraderLab. Thank you. But really, we need to learn about ourselves in order to master the obstacles to this specific business. So if you want to learn about this business and the obstacles and maybe develop tools to deal with those elements, and while there is no perfection, unfortunately, but being human, perfection isn't part of humanity. But we can strive to be better. And if we can strive to be better and only interact when we have a statistical edge, which means developing discipline, which is very hard for us because of that emotional trigger, then maybe over time we'll have an edge, and maybe over time we can become profitable in spite of ourselves, right? That's the TraderLab. That's what it's about. You're all welcome, and there's no cost. Let's take care of business. We have an interesting day today, and in TraderLab there was a lot of opportunity, and of course there's always risk. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, though I do post when I can continuously, subject to my own trading and my own focus and what I'm doing, what's happening in the market, and the community is interactive. So it's mutual support. It takes really a village, if you will, to do the work. Data mining, development of structured trading, structured trades, and discussion, because the market is not mechanical. It is not plug and play. It is something called contextual. And the context is the biggest challenge. What's the market doing? Well, if you see a gap like this morning, what are you doing? Do you think it's time to get long because there's a new all-time high? Or what about the longs currently in the market? What might happen? This is the higher time frame, or these are RTH candles, okay? And you can see we've been making a new all-time high. You get profit. Look what happens here. Gap, all-time high, profit taking. Inside day, test, higher, higher. Now we're just going to go and look at some things here. New all-time high, profit taking. Now what's interesting about these days, and I pointed them out yesterday in the stream, so you might want to check out the previous couple days. This was really a big deal because this is Friday. And Friday, we got within one tick of the ETH low. And for Friday, on the short side, which I had in the morning, I was looking for it to get into these stops and get here. These were my targets on Friday. But what happened? Write this down. Think about this. If this, then that. If not, then what? Then that. So the if not, and I called this an anchor. Now, what does it mean, an anchor? When something that seems so logical does not happen, which means not get into these stops. We got within, I don't know what it is, a point or two of something, and missed the ETH low. And the ETH low has over 90% probability we'll take out either ETH high or low. Well, one tick, how about that? And then we come back in. So this was a big deal. Now notice what's happening here. Let's just look a little bit here. Higher low, sell stops. Higher low, sell stops. Higher low, sell stops. We're not getting down to the stops. Now here, higher low, we do. Thanks for playing. We fill the gap, take out weak longs, get shorts in the market. Remember, market goes up to go down, goes down to go up. Then we have an inside day. Now, if we're in an uptrend, while it can do anything, we have an inside day. We opened up here. We tested inside. We didn't get quite to the target on this day, and then we found our buyers, and then you leave a tail here. Sell stops are under here. New all-time high. What's under here? Sell stops. And I believe day before yesterday, we gapped, came down, again, thinking about maybe coming down here. No bueno. So sell stops, sell stops. Resistance, right here. Yesterday, again, what are we not doing? We're not getting the stops. It's like, really? That's pretty bullish, don't you think? And then today, the gap. Okay, now, what is important about today? First of all, up here was something called the naked volume point of control. Now, this is market profilage, and you can learn all about this in TraderLab if you're interested in it. And all we're really doing, this is not complicated. The problem with all this is, for us, is it's random. So the randomness is what drives us nutty. And it does it because we're looking for certainty, aren't you? Who wouldn't? The thing is, looking for certainty actually creates the problem, in my opinion, because it doesn't exist here. So we're trying to solve for something that doesn't exist in this business. So we all load in, you know what we do. We all have done it. You know, you load indicators on, you throw the everything but the spaghetti against the wall. In fact, a little sauce, and then you see what sticks. Why are you doing that? You're not conscious of why you're doing it. It seems logical. So this was the retail price from up here. Yesterday, if you remember, it was longs only. We had targets up here, yesterday's high. We had 15 as a micro composite low volume node. It's still there. That was a target coming up, and then 24. So this was roughly this is the high of the day. Who knew, right? Nobody knows. So don't worry about it. Then we get our gap. Now what? New all-time high. And this sets up two possibilities. Now, if you're in TraderLab, we have something called a context grid sheet. It's a guide. It's not a predictor. So what did we do? Let's start now at the beginning. First of all these levels, and this is the previous all-time high, and this is the 24 that I just mentioned, okay? So, and this is the ETH volume point of control. What are these volume point of control things? You know, they're the highest volume in an auction. So the last auction is the ETH. What's an auction? What's too high? What's too low? What's retail? Now, when I think of this and the way I relate to trading, because I had to make it simple, why does it need to be complicated? Make it simple. It's still going to be random. You're still going to take stops, whether you make it complicated or you make it simple. Which approach do you think helps you? Complexity or simplicity? Still random. Think about it. Can you act better with a simple process with minimum inputs, or do you get more certainty with multiple inputs but random inputs in a random environment? You need to answer the question, because that's the core of the problem, in my opinion. At least part of it. So, what are we doing here? The market's opening out of range in a gap. What does that tell us? When the market opens out of the previous day's range, so we gap, and I think yesterday's high is somewhere around here. I don't know where. Hold on a second. Down below. Got to look at this stuff. If I can find it. Hold on. Let me try to look elsewhere. I got so many levels. 14 or 15, right? Something like that. So it's all the way down here. Because that was a target coming up yesterday, if you remember. Yeah, this. Remember this? This was yesterday's target. And then this. We got to this one. And again, nobody knows. So don't think, there's no magic here. What you have, write this down, is you don't have magic, but you do have maybe. Maybe it'll do this. Maybe it'll do that. What else do you have? Nothing more than maybe. So it opens out of range in a gap. It's out of balance. Now there's two possibilities. Gap and go. In other words, gap and, oh my goodness, happy days are here, and we go off to the races. But what else do we know? The market is long. Long means that think of it like a ship where everybody is on one side of the boat, if you will, and we're tilted. So everybody is long. And it doesn't mean you won't get more buyers. It's not the point. The point is, might we get sellers? Now, who are these sellers if they come in? They are responders. That means they're responding to the gap. And they're going, oh, a gift. Let me take it off the table. Let me cash out. Let me take some profit. So if we anticipate that, and this is what Trade Plan is about, and this is what we work on in TraderLab, then we are prepared for what might happen, not what will happen, what might happen. Because remember, we don't know what will happen, we know what might happen. So what do we know? We have the ETH high. We know there's a high probability to take out either the ETH high or low. Now, here's some statistics, and you have to vet everything for yourself. Past performance, not indicative of future results. Write a couple of these things down. You might find it interesting. When you open higher outside of range, there's about an 81% probability you're going to get there. Okay. Getting to the ETH high or low, there is about a 98% probability of getting to one of those. You would think this is easy, wouldn't you? The ETH high has a 79% probability. So if you're opening here, these are high probability targets. But then the ETH volume point of control, 81%. So what do we have? Higher probability to go here first and then to go here. Okay. Then we have 24, which is a naked volume point of control. That means it's a retail price from the last time we were here. I showed you this at the top of the stream, and if you missed that or it doesn't fit in your head, just go back and review the stream later. It'll be posted, and you can kind of see how pieces fit together. And I always suggest you take a couple notes and you ponder what you're seeing. That's how you learn. I mean, if you find the process here that I share, something that you might find interesting, because I don't use any indicators. I do read language. And all I'm doing is the same thing your indicator's doing, except I'm the indicator. I'm looking at the inputs and I am translating them. And your indicators are kind of doing the same thing, but they have no idea that we're gapping, out of range and that the market is long and that we might get selling. Profit taking, okay? So I'm looking for either gap and go or profit taking. And I know I have these probabilities to deal with. Let's keep going. I know I can come back here. The ETH mid has a 68% probability. Filling the gap has a 67% probability. Isn't that interesting? Taking out the first hour's high or low, 98% probability. Which one? First hour's high or the first hour's low, wherever that's going to be. Clueless. Getting to the previous close, it's about 50%. Okay? Getting to the previous point of control, 38%. So what's happening is the probabilities are skewed to the upside. So what is the dominant piece in all this? The context. So the context is the top of the food chain. So the context is either gap and go or selling and profit taking. If I understand that I might, because the market is long, I might get profit taking by all these longs that are sitting here, I might want to be looking for a short. Let's look together. I hope you guys are getting something out of this. Now, this is the RTH open. So my first trade, and I posted this in Trader. Now, I don't call trades. It doesn't matter what I do because I'm trading a time frame that is more swing-ish or larger rotation oriented. If I know the market's long and I detect sellers, I know I have a lot of long profit-taking potential and I have targets below. If I open and then I rotate and then the buyers come forward, I can just go and keep going. And if I take a stop, it's part of the thrill. What's new? We all take stops, so we got to get over it. Casinos pay the gamblers. It's just part of the business. And it's hard to separate ourselves emotionally from it. I understand you do too. The thing about it is, if you understand how you behave, what's triggered, fight and flight and all those chemicals, you're going to anticipate them. Your trade plan is going to already have that as part of the plan. In the morning, before I trade, I kind of recenter my brain. Here's what you're going to feel. Here's what it's contributed to you in the past. Not good. What are you going to do about it? I'm going to recognize it. I'm not going to respond to it. And yes, I make errors in spite of myself. Why? Still human. So I've kind of accepted that. So let's look at the RTH open. This is called developing volume point of control. It starts at 0 at the RTH open. Let's look a little further. Now, we had the CPI report this morning and market took off. That report is material to how we open. Sometimes you get a report, it's a great report, and the market just goes nuts over it, okay? And we get that gap and go. Or the market prices in the report, and then you get the profit taking. And you don't know, again, which one. But for me, I'm looking for shorts. Unless, of course, I get the buyers. And then I'll take a stop like everybody else, and I'll go, well, maybe that wasn't such a good idea. But it is an edge. So let's look. resting liquidity. This is the thing I'm looking at. And so let's go back and look. Let's come back. This liquidity is in here 5 minutes before. There's a seller, okay? I'm seeing my selling right before the RTH open. I'm just letting you know, I'm going, oh, that's nice. What happened here? So right here, I see, and I don't know anything here. I'm just observing it. Sellers are here. Icebergs are here. Market's going up. Buyers are here. There's the iceberg. You see this. This is delta. This is showing the aggressor. Now, who are aggressors? I just always like to review this idea. Initiators and stops. Sell stops, buyers, absorption. I come to the other side. Sellers. The buyers are here. Absorption. So I've got, you can see the buyers are absorbing here. The sellers are here. So it's like a little bracket of behavior. The buyers are here, the buyers are here, and now notice how the sellers take control. You didn't see this kind of selling. You see little, but that's different, isn't it? What does that tell me? Watch. Now, I box things out, and I do this, well, first of all, to help you see structure, because price action is a big part of this, but also the behavior of liquidity and order flow. So now order flow, I call it the tip of the spear because it's the most meaningful information in a short time frame, if you will. So I operate in this as far as initiation, but it's all overlaid on the chassis of the profile. So let's come back here prior to RTH open even. Right here. Now, I don't know this. Now, this is even before they open. What happened here? This is an auction. Chop, 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 chop. Sellers, buyers are here. This actually should be down here. I just want to try to show you something. And I draw these things around. I do it because, let me try that again. I draw these because I'm going to forget. I'm just like you. Easy to get myopic. I don't know if I can grab this thing. Doesn't seem to be doing it. Nope. One more try and then I'm not doing it. Yeah. Here, I'll show you what you're looking at right there. See this? This here is an auction. Sellers are here. The buyers were absorbing there. So I got sellers and buyers. It creates something called a low volume node. That's because of that. And the volume is right here. Now just follow with me. What does this say? Let's now remember language. And I know I'm spending a lot of time, we're not even in the RTH open. How do you organize the information? Well, I know I can get this, I can come up here. I got this in the book. I can do anything. This is the first suggestion to me that I might have sellers up here. Okay. So, and where was it too high? Let's remember this. There. Where did the sellers take over? There. Okay. Is everybody tracking so far? Yeah. Hump TV. Yeah, I do. I'm getting a question about master list of probabilities. Yeah, there's a whole library of webinars in the TraderLab and statistics in the document section. And you're all welcome to TraderLab if you're visiting in YouTube. You can use the link down there. There's no cost for this. So this is before the open. So this I know, sellers are here. Okay. And now I'm looking for my RTH open, which is going to be there. So let's get into the open now. So I want you to know before the open, I found my sellers. Now, what I don't know, like everybody else, is are buyers going to absorb what you see here? And am I going to just take this out because I have a high probability? That I do not know. Welcome to trading. Nobody knows anything. We're all clueless. Watch. So what do I know? I know this is too high. In here, in this fractal, I get my buyers. And I know, why is this too high? Good question. because the sellers are here and because the sellers are there. If I come back up and check it and I see my liquidity start to come back in, I now have resistance. And, like everything else, who knows? Now let's go a little further. So this, okay, and this, just saying. So now I have resistance, I have absorption, and this is my resistance. My low volume node was there in the, now this resets, okay, over here. This is now RTH only, and this is showing you only what's visible on the chart. So I can look at this, and I can still, now this wouldn't be here. This is the outside edge. So I come out, sellers are in control. There they are. I come back to the high volume. Think of it like shopping. I'm not buying that. Yeah, but it's on sale. Retail. What happens if a retail price when you go shopping in the supermarket, or even let's say your little store down the street, is too high? You may like shopping down the street, but when you come back to that store for your pint of ice cream Saturday night for the movie, and it's $7 a pint, you might just say, I'm not paying that. That price is too high. The sellers left the store. I like shopping here, but I got my sellers up here again. Now, resistance, support, 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 resistance, break low, retracement. This is a short, advanced, right here. And where's my resistance? There. And where's my stop need to go? Out here. And I risk getting taken out. What are you going to do? Life in the fast lane. Okay? Where's my opening swing low? It's here. The buyers bought in here. Their stops are under here. So, c'est la guerre, as they say. And what's the probability of getting here? I know you wrote this down. Overnight volume point of control was the highest volume in the ETH, 81% probability. Now I got a 90% probability of getting here over. So, gee, Tom, why did you take a short? Because the market's long. And I already saw my sellers. Okay? So that's the first trade. Now, and this is posted in TraderLab too. You guys can check this out. So over here is full session VWAP. Now, for me, I looked at this as a scale. Because what can happen here is I can come here and then I can come back. So it's just, I just sort of go to targets and then whatever happens, happens. VPOC migration. I'm going to label this. I call this a variable high volume node. And all this is in the RTH, I'm tracking the development of value. And this yellow line is all it's doing is measuring volume. It's not telling me to get long or short. That's my my trade plan tells me what to do. But this gives me behavior because this is too low. If this is too low, and notice how I find some here, let me show you microstructure. Now don't get confused, please. I'm going to show you how to read the market. Remember, no indicators, language. What was this? We open. This is the new retail price up here. What was this? Wasn't this too low? You can't buy it here in this fractal. But what do we know over here? It was too high. This is too high. This is too low. Okay? So what I'm doing now is I'm breaking the market apart, and I call it fractals. You can call it whatever you want, but there's no time in this. Now, most of you guys thinking, the concept of time. I get it. Let me get this in here. We all did, and we all do. And time is fine, except not here, in my opinion. And the reason is the behavior is not on the clock. It's based on the participant. So I don't use time here. I don't think of time. I can't. What am I going to do? I got to wait 5 minutes. Really? What does that have to do with anything? Who created the clock. It wasn't the market. It's us. So too low, too high. So this is short. This is a short. And it's very aggressive. I always suggest in TraderLab, this is not for you. This is to learn, not to trade. It's the last place developing traders trade. So let's continue along. Liquidity's pressing. This is a scale. And then what is the possibility? 24, next. There's more. And there's a gap, isn't there, guys? Don't you think? And what's the probability of getting to yesterday's high? I know let's come back to this. 67% probability. Let me ask you a question. If you know the market's long, if we gap, if we have a new all-time high in the ETH, what do you do? Well, if you don't get long, maybe you want to get short. And maybe your trade plan would, and what I just showed you would give you a sense of maybe get short. And then where are we trying to go? Fill the gap. We're trying to come here, settlement, and get down to 10. That was the highest volume or retail price from the last auction. So we have two auctions, ETH, so that's a target. And then this is hanging out there from last time we were up here, a target. And this, a target. And there's more. Let's just go down the food chain. This is a target. And this is the big kahuna. You're asking me why. I can hear your questions. Let me show you. I got to bring you back. This right here is a target. And why is it a target? Because in this whole area of volume, this is where most of the volume is. It's right here. And let's think shopping. This is your big box store. Fractals are really multiple time frames without the clock, okay? So in the profile, I know that most of the volume, because notice how we've been moving, and then we consolidate here. Most of the volume is up here. Well, that's the highest volume. And in fractals, what did I do? Let's come back. Fractals now. Let's go back into structure. In a fractal, this is where most of the volume is, in this little consolidation. As I go up in time frame, where is most of the volume? It's that yellow line, which is there. So if I'm trading mean reversion, and this is why I say mean reversion is where developing traders, I think, can get the most bang for their buck, is to understand market mechanics, is what did we do in a fractal? We returned to the mean. There. What are we doing in the higher time frame? Returning to the mean. If we get under here, what's the next mean? It's here. And if I'm trading a higher time frame, subject to what you think about it, filling the gap, and then where's my next mean going up? It's there. So the shorts were all good in my book, and nobody knows where you're going to go, and that's all part of the thrill, is here. Then over here, if I can't get below it, and we might later, it's not my job, it's either you're done with the shorts, it might be a long or nothing. That's all up to you. Okay? So I never got to take any longs this morning. I just took shorts. So I'm going to show them to you. Not a lot, I'm not somebody who wants action. My perception of action is every time I put a trade on, I'm taking risk. And if I'm going to take risk, I'm kind of the thing I want to get paid. So I take stops, you take stops. So if I take stops, I am probing for location. And I really am looking for larger rotation potential, and it doesn't mean it'll happen, to cover my stops. And my stops tend to run around 3 points, sometimes a bit more, sometimes less, but it averages, and this is based on volatility and average range and just structure. So if I'm using price action structure, I'm actually operating in this, and that's where my reversion is to the mean. The mean of the fractal is where the high volume is. So as I go in quote time frames, as you think of them, I'm always looking for reversion, and my triggers, no matter how micro I get, are based on the same ideas. And then when this shifts down, let's talk language again. This is too high. I'm not paying that. Well, all right. I don't blame you. I think it's a little expensive too. New retail price. Now we have other structured trades that's set up here, and I'm only going to discuss them. You have to vet everything. Everything's random. Now, what does it say? Let's come back to the language. If this is too high, microstructure, I'm not paying that. And then in the developing daily time frame, as you think of it, or fractal, this becomes too high, and this is the new retail price. I'm not paying that. Well, what about this? Is this too low, and now I'm going to come back across? Or is it still too high? Good question. VPOC migration. I did a webinar on this. Too high. Potential continuation short or nothing, or trade management opportunity. VPOC migration. Too high. Now, there's more. You're going to say, yeah, there's more. Yeah, there's more. What's going on here? Mid is moving down, VWAP is moving down, and high volume is moving down. So what is high volume? Let's go back to the store. I'm not paying that. It's too expensive. I'm not paying that. It's too expensive. You get a sweep here. Now I'm going to just a little bit more. Look at the icebergs. Big buying. That's what creates this. And right here, the teeth will start to chatter because I come over this. But where's the last price that was too high? It's right here. Now, that's my resistance. And we can come back to VWAP and mid and pop the stops, of course, and then whatever. When I break below, again, and where's this was another target right here, sweep. Sweep sets up counter rotation. So it's only shorts for me. Now you can take longs. It's not my business. That's yours. You know? What does this say? Let's come to the language. I'm not paying that. Look at the liquidity. Press. Break low. Oh, you got to be kidding, Tom. I am not going to pay that. Too high. Now I'm going to take you to microstructure. I'm just going to break this out for a moment to show you something. What is this? What do we know? Let's look. I'm not paying that. Outside edge. Retail. Break below. Oh, it's too high. We're out of here. Sellers in control. Watch. What happened here? You're crazy. I'm not paying that. Break. Start a new auction. Where's the outside edge? It's here. What happened? Right here. Too high. Microstructure. Support. Break low. Resistance. Resistance. Sellers are here. Why? Buy delta. No bueno. What about here? Buy delta. No bueno. What about here? Buy delta. No bueno. Why is the market going up? It's being absorbed. There's just showing you some stuff. And sellers now are in control. Buyers take a shot here. Sorry, Charlie. Remember Charlie the tuna? Break low. Sellers are in control. VPOC migration, new retail price. What it is saying is there's more volume right here than any place else at the moment. And the buyers take a shot here, but the sellers are here. Break low. This is absorption here. Sellers get below. Think of it like Pac-Man. If the sellers get below and the buyers consume the sellers, then the potential is for counter rotation and potentially reversal. We don't know when, where, but what I know is retail. If this is still too high and it's represented by that high volume, think of it like this. I'm not paying that. Yeah, but it's on sale. Retail. And if we leave it, then now we have the next location. So now what? I break low. I come back, and now I'm coming out here. Somewhere out here, and I have resistance here. I'll throw a little line on here for you. Now, there's nothing, all this is a structure, and the market could do whatever. So let's look over here. Let's just do this for a second. Now, this may, you may lose your breakfast over this, but I'm just showing you some ideas, and this is not anything you need to do. What's that? Isn't this where the buyers failed? The sellers took over. And what's out here? There's my liquidity, which is what I wanted to show you, order flow. See how I'm starting to put pieces together? This was here. Boom. Sellers are here. These buyers were absorbed. Hasta la vista. Thanks for playing. Liquidity comes back in the book. I come back to my outside edge where the sellers took control. I test the sellers here. There's my absorption. There's my liquidity, stacking, skew, short. Again, this is not necessarily your thing. I'm just showing you structure, And this is kind of what you can learn in TraderLab. What's this? Structure. Structure. What is this? I'm not paying that. Liquidity. Skew. Break low. Where were the buyers? There. Where's the micro high volume? It's there. Where do I test? Mean reversion in the fractal, mean reversion in the developing higher time frame. Multiple components, compound behaviors, liquidity, order flow, hasta la vista. Thanks for playing. You're getting a coupon to the buffet. Watch. Now, where's our targeting, by the way? You do remember our target. This is yesterday's high. This is the gap, okay? You could be done or, and I want to try to get caught up. What do we do here? VPOC migration. Does this look familiar? Let's label it. You could be done. You could be in your Barca lounger, or you could get your breakfast delivered. Totally up to you. What's this? Too high. Right? Why is it too high? There's more volume here than there is there. What that's suggesting is this is now the retail price. Now, you got to remember something. The market is trying to find too low. And I always say, well, good luck with that. Where is too low? Liquidity here, too high. VWAP mid. I'm always thinking there might be a squeeze. Where's my outside edge? Remember, it's out there. So I've got this. I've got this. And I got, see this little auction down here? Notice the buyers were here. The sellers were there. I break above it. And where do I hold? Where the buyers took over. Just saying, something to think about. These are triggers. Now, what do you do with this? Do you really want to get long? Well, this is up to your trade plan. You could do whatever, whatever you want to do, you do. But how do you know what to do? Isn't that an interesting question? Well, the thing you know is your plan and where your edge shows up. What you don't know is what's going to happen. Because the market's 100% random 100% of the time. You don't know. I don't know. So if I don't know, other than my fear, which I'm very familiar with because I don't know, and when you don't know, you're triggering this risk avoidance mechanism. It's under the conscious mind. Depending how you look at this, when we crawled out of the primal swamp, depending on, theoretically speaking, it was really, survival. So as we developed or evolved, however whatever your perception is of that process, we became conscious and, intelligence. But it's built on top of a layer that is very primitive. So that layer of protection and risk avoidance is constantly triggered in this environment. It's the biggest obstacle for us. I believe anyone who comes to TraderLab and does the work can learn how to trade and build a profitable business. But there's many elements, not in trading, but in the decisions we make that we're not conscious of. Like, I want many setups. How many you got? No, that's not the problem. The problem is one. You can't handle one, you'll handle none. Do you have the discipline to be patient? Most don't, because they don't understand FOMO. Okay, what was too high? Here, where's our outside edge? Let's just come back out in here. So what is this setup potentially? It's called mean reversion. So this is an outside-in process. And again, you have, and what else do we know? We have this, and in the higher time frame, subject to how you define it, we got this. All of this is mean reversion in fractal. So coming there, coming there. So if I come outside, I'm taking the same trade here to come back to there, or wherever it goes. It might only go to settlement, you know. Nobody knows, so let's not worry about it. Can't worry about what you can't control. What do I know? Too high. I'm not paying that, Tom. VWAP. Now, and liquidity. Now, you got it here. You got it there. What are you going to do? What do I know about out here? Too high. If I take a short here, I got to be out here. What happens here? Too high. Break. What does that tell me? My sellers took control, right? This is beauty of Bookmap. I can open this thing up and I can get into as much minutia as I need, okay? So, too high. VWAP. Notice the liquidity. Important. Skews the book. If I get short, let's look at it. Buyers are here. You can see the bubble. Why does this go up? Because there's a buyer here. What about this? It comes in. All right, going to the moon. Where's my buyers? They're here. What happens here? You see the sellers? What does that say? Maybe too high. Where do I retrace? To the bottom of it, right? Where the sellers took over. Here's my buyers. This sets up a short if it's in your plan. Notice the liquidity comes in, sets up a short. And where does it come back to? Now, I'm in something called microstructure. And this is not what you need to be doing. You need to be understanding what's going on. And the indicators that you might use don't define this. The structure defines it, because the structure is following the volume in the participant behavior. Trading is a participant-based business, not an indicator-based business. And I know I always talk about indicators because we all grow up on them. You know, we think it's indicators and timeframes. What else are you going to do? You get a software package. Why do you think it has 150 indicators in it? Have you ever thought about why? More indicators. Wonderful. Why? It's not because they create successful traders. It's because they all work randomly. But do any of them have an edge? And if you're going to create an edge, is it more indicators that creates more redundancy and more certainty? Or does more indicators create more conflict and uncertainty in an 100% random environment? How can you make a decision when you have conflict? We already have fear and we already have randomness. So why are you compounding the problem and creating something that potentially doesn't have an edge but has random winners? You see, the problem is we're going to take random winners and try to make it better. It's very logical, but the process you're using may be defective, so you're always going to wake up in the same place. I coined a phrase for myself. I call it Trader Groundhog Day. Working hard, waking up in the same place. Curve fitting, right? Gee, 20-point trade. Okay, next time I'll get that. Look at that. In the past 4 weeks, it's happened 5 times, whatever. You know what I mean. You've all done it. Me too. Anyway, at some point, the light bulb went off. And I have to say, the light bulb was a bit dim because it took a while. When I started trading, there was no information. We didn't have PCs. We didn't have anything, There's no internet, so you're really isolated. I was anyway. All my friends were floor traders, so I really didn't know about probabilities. I was using P&L and percent profitable, you see. That is not the right way to measure this. It has nothing to do with your P&L. Your P&L is the outcome of edge. It is P&L is not the answer. And if you're focused on P&L, that's actually the problem. And you would think they're both the same. They're not. This is a short. This is a trigger, break low, sellers in control. Where's the micro high volume? It's right there. Right there. Micro. There. Where's the outside edge? Where it dropped. Buyers were there. If the buyers are under the bus and I get my sellers, I can sell this. I can sell this. I can sell this. And again, this is more advanced. I can sell this. You can do any of that. Whatever you want to do, you do. And where am I going? Next target is this. You could be done again. Another target. Get the settlement. Get to this. 11. Yesterday's retail price. And then there's only one more. And it doesn't mean it won't, Oh, here's something for you. Forgot. 9:30, we have a structured trade in TraderLab. It's called the IB continuation trade. I always forget to talk about this because this is structured trade. I took this one. I'm going to show it to you. Now, as I mentioned, I posted in TraderLab. I think I had 3 or 4 trades today. How many do you need? And I'm done. I'm in the Barca Lounger now, other than visiting with you. Buyers are here. Break low at 9:30. This is called the IB. We get a sweep. Now I'm using order flow again into liquidity. Buying icebergs, sell stops, 245, 200 here. We got like 500, just getting thrown under the bus here. Thanks for playing. So what makes this trade potentially work? Remember, top of the stream, the market is long. The market gaps. Let me punch the coupon and take it in and get my QB doll. Responsive selling. So selling. And if you're long from somewhere down below, none of these longs have really had a problem. What are you going to do? Sell. So if you get a counter rotation, might you use it if you're still hanging out to take profits off the table? And until it changes, it hasn't. I always talk about this in TraderLab. It's if this, then that. If not, then what? If we get a counter rotation after breaking the IB low, which is the first hour's low, and what was the probability of taking out the first hour's higher low? You wrote this down, 98% probability, and you have to vet that, right? And filling the gap, 67%-ish probability. Getting to the previous high, 67% probability. You following me? Getting the settlement, about a 50% probability, but that doesn't matter. It's the condition of the market supersedes everything. Market's long. Statistics don't know that. Break low, too high, fractal, right there. See this? Too high, too low, retail. I'm not paying that. Leave the store. Now, where did the buyers fail? Right there. Let me throw another one of these little things on here. See? Come back. You got to be kidding. Sellers in control. Potential short. Microstructure. Now, these are not structured trades. It's structure. I'm showing you how you can navigate. Now, I'm talking about the IB continuation trade. Range extension, pullback. This is a potential short in the TraderLab. Sellers in control. This is a potential short in the TraderLab. This is a potential short. All these are shorts. And you're going to go here for your scale. Narrated this one. But when I say narrate, doesn't mean anything. And this one, you come back here. So you would have a scale here. Notice the liquidity. And if we come back up, where are we coming? Where's our resistance? It's up here. Right? Back to the IB. Let's see what it does. It's a short. TraderLab structured trade. Boom. And where are we going? Next target. And no clue, by the way, And what's this thing about ETH higher low? I know you wrote it down. Almost a 98% probability to take out either the ETH higher low. And what happened up on the top? Let's come back. What did we not do? We did not take out the ETH high. There's the current high of the day. We never got here. So what does it mean? Potential. And it doesn't have to. Nothing has to happen here. If I know I have two major locations here and the ETH low, I'm going here. And then bark a lounger. That's it for me. And that doesn't mean there aren't trades here. There's still more trades. You have questions. I'm going to come up. Thanks for your patience. If this is interesting to you, subscribe to the channel. And better yet, use the link in the bottom of YouTube. Visit TraderLab. I'm going to tell you, trading does not have to be complicated. I know I thought I would find something unique in the complexity that others did not find. I'm going to suggest, and you don't have to accept this, that anything you ever think about has already been thought of. There's nothing new. I'm sure there's AI. Fine. So what? There's nothing new. All there is rebranding and repackaging of things that have already been out there. Anytime you see the secret of this or the only one thing you need, just go the other way. That's just an opinion. It's always up to you. This is based on the actual way the market works. And we all take stops. We all have losing days because there's going to be times, a lot of the times, where we're not in alignment. And it just means that we have a plan that zigs, and sometimes the market's just doing whatever it does and it doesn't fit. So we need to have risk management. We need to know and accept we are going to have losing days. We are going to take stops. Casinos pay the gamblers. It's overhead and cost of production. We feel like we're wounded and a failure when we take a stop. I'm going to tell you that's all emotions. It has nothing to do with the business. That's your quote feelings. Your feelings, fine. But that's not what this business is about. It's not about how you feel. It's what you do. So we're always going to feel. So I recenter my brain before I start trading. I actually made a tape of myself. I coach myself, and I'm saying, you're going to feel this. And here's the common errors you make. Yeah, everybody does. What are my errors? Well, if I get too myopic, the voice in my head is the lunatic. I call it the lunatic under the hood. Hyde, Jekyll and Hyde. Hyde is that primal wiring, that voice that says, gee, you better get out. You're going to give this all back. Or I'm going to move my stop to break even when your stop shouldn't be moved at all. But because of that primal wiring of risk avoidance, you're already operating in an environment that is not supported by those that stimulus. It is supported by discipline and edge. Big difference, isn't it? Anyway, this is let's take a look at this thing. Oh, VPOC migration. What does that tell us? Too high. Sellers. Next target, right? And if we get under here, we got more. Now, I posted in TraderLab, we got to be kind of cautious today. And because there's tons of stops under here. Now, I don't know what's going to happen, so let's not think about that too much. But 15 was a target yesterday, and this, if you remember, 24. Well, we're under 15. And if we get further long liquidation, we can end up with an outside day, and we can take all this out. That's not a trade recommendation. It's always just a possibility. Primary target for me was this. Now you get under here, changes the story. So we have to watch this. Questions, guys? How we doing? Thanks for your patience. How we doing in YouTube? Please give a like. I hope you find this interesting. This is gaming. And I think most of us don't approach it like that. If you understand how casinos operate, now you understand the trading business in the sense of as a business model. They only play games with an edge. They play them the same way. If they pay the gamblers 3 times in a row, they don't sit back and pout. They don't get angry. They don't bang the table. The dealer just deals the next hand. They know they're in a random environment like we are. They know they're going to pay the gamblers its overhead and cost of production. They also give the gamblers the cocktails and the ticket to the buffet. How can they afford that? Because they're disciplined and they just play the games, and they know what they have control over, and they know what they don't control. They don't control the cards coming out of the deck or how gamblers play the cards, okay? But they do control how they play the game, and because they keep statistics, they know that their games have an edge that favors them. So over a large random distribution of interactions with the gamblers, they extract dollars, even though they still pay the gamblers. That's the business. So if you're trying to make this business something else, then you're trying to solve for something that is not in alignment with the business. That, in my opinion, at least from my experience, didn't work for me because I didn't understand. I was trying to fulfill my psychological and emotional needs, not operate in the business that I was actually in. I was trying to make this something it isn't. So how successful are you going to be trying to put the square peg in the round hole? You know, you're going to have winning trades. Remember that I referenced those 150 indicators, and there might be more depending on your software package. And why are there so many? Because they all have winning trades. If you had a random buy-sell button and you didn't know whether you're going to buy or sell, you would still have winning trades. That ought to tell you the problem is the fact that you have a winning trade or even a sequence of them has nothing to do with whether you have an edge. Imagine you take 10 trades and 4 of them are winners. You're going to keep taking that trade or trying to make it better. Maybe 5 of them become winners, 6 of them become winners, and it's still a losing trade because you're not letting your profits run. What is the yield with a specific process? That's what's important, not random winners. It doesn't take any skill to have a winning trade. You've all had them. So if you've all had winning trades, then you should be profitable. If you're not profitable, then it means you don't have edge. It's not complicated. So if you're going, gee, I'm working hard and I am having winning trades, why can't I get more winning trades? It might not be the fact that you have winning trades. It might be that you're trading without an edge. And if you're trading without an edge, you can have as many winning trades as possible and still lose. So the idea of TraderLab is to help you build a sustainable business and understand the business you're trying to be in. And it doesn't matter how you get there, right? And there isn't one way to achieve it. But most retail traders run out of dollars and time before they ever understand the business they're trying to be in or actually solve for the problem. By the way, what's going on right here? If this is too high, what's this? An outside edge. That's called a low volume node. If that's an outside edge, then this is support. Microstructure. Outside in. This is your support. If I get below here and this, notice this liquidity, this is very important. VPOC migration, too high. If I cross over here, then I'm in the squeeze area. If I can't get back above this and I get below this, then there's more on the hit parade. And what else did I point out to you? This. Not a recommendation, it's just maybe. How we doing? Don't forget to hit the like. Hope you're getting something out of this. This is TraderLab. Athens, why did I not draw LVNs in the ETH? I'm not using them. Athens is asking me what there were LVNs in the ETH. Why did I not use them? Because I'm trading the current auction. That's all. Because we went up in the ETH. That auction is done. I gapped. And I was at the high end of the ETH. I got longs in the ETH. I got longs in all time frames. If the market is long, why am I buying the market if I have responsive selling? So no, I'm not buying LVNs. You don't see me taking any longs here. Doesn't mean longs aren't a wonderful idea, or at least counter rotations. And this is really an individual thing. In TraderLab, we have traders who are taking longs. Now, that's not my plan, because I'm a little bit more of a Barca lounger trader. I will like when I say I like, my objective is to pay for my stops. I take stops. You do. I do. Who doesn't take stops? I don't know. Now, I don't have to take a stop, but the way I pay for my stops is I look at structure and I attempt to go for larger rotations. So if I'm going for my 10, whatever it is, and it's not up to me. As long as this thing is doing what it's doing and the structure is suggesting outside in, I'm trading a context called mean reversion. That's outside in. As I go up in time frame, this is the mean in the higher time frame. So I'm trading to this. Now, if I get below this, I know I've got all kinds of sell stops under me, and I might set up more liquidation. So this is a very important area. If I get under this, I'm going to be watching this very carefully. Because right now, what do we know? Buyers were here. Counter rotation. Sellers are here. Trigger is there. Trigger is here. What is this? Too high. Where's my new retail price? Here. Where's my buyers? Here. Now what? Very important. Not a recommendation, guys. Market could come under here, trap shorts, and then come back across, or you're hanging out and you're riding down the food chain. It's either or, but for me, I can't take a long. I'm not saying that's a good plan. I'm just saying why would I buy a falling market? And why, if I get under here and I've got 3 days of sell stops under here, why would I even think about getting long? Me, not you, me. You can take all the longs you want, but not me. Only because it's my plan. The best way, Andrew's asking me, when's the best way? Chris, I see your question. I'll answer that for you. How do I know traders are trapped? You just got to look at really where the stops are piling and all fractals and time frames. I know if I get a counter rotation, I'm going to rotate over the weak traders, the retail traders. I don't want to behave like them. In fact, guys, write this down. Think like a retail trader. Don't act like one. So when I think like a retail trader, I'm thinking these guys are all long coming in, and that the possibility exists if I don't gap and run, which, then sellers, profit taking over. So I'm just really riding the profit takers down. And is this the high of the move? Is it all over? It's not my job. Can it go higher? Absolutely. Will it do it today? Probably not. So do I want to get long? Probably not. And let's say now we find too low and now we go up 40 points. If I don't have a trade for it, I'm just done. It doesn't matter to me. I just take my trade and that's that. I'm not here to play a video game or to try to squeeze blood out of the turnip. I'm here to take intelligent risk with edge, and then, I'm going to take my stops when this thing reverses. At some point, they're going to squeeze. And when that happens, just like you, I take a stop. Now, other than how I, quote, feel about it, that's it. Okay, what changed? Well, what has changed? So far, too high, retail, outside edge, too low, reject, next one. Too high, too low, too high, too low, too expensive, hasta la vista, catch on the next one. Too high, too low, too high, too low, retail. Still too expensive? If I get through this, then what? Just keep on trucking, keep on keeping on. Now, question was about correlation. How does their divergence affect context? It doesn't. It's the other way around. If you're trading the NQ, it'll be similar, but not the same. I do watch the correlation. I don't trade the correlation. I keep an eye on it, because they're the same. Now, at times they diverge, but if I'm trading the ES, I'm trading the ES. I'm not trading the NQ. They're different. What's different primarily is the depth of the market. So I got more volatility, and my perception is more risk in NQ because the book's thinner. So, for example, if the book has 25 in it, the limit order book, and there's stops, and 100 stops go off, just as as an example, you're going to get skidded until all those orders are filled. What does that do for you on risk management? On the other side of that, it works both ways, so you get more volatility. So I don't trade correlations, and I don't need to look at the NQ to trade the ES because the story's right here. Anyway, I hope that answers your question. So yeah, correlation, sure. I don't have it here. I do have it. I take it on and off. It just is not material to me to trade. Because again, I'm a minimalist. I know, and this is normal. We all did the same stuff, Ticky, Trin, advancing issues, declining issues, advancing volume, declining volume, right? Oscillators over the ratios of this stuff. I did all that stuff. I built the system. I'm just telling you, I've been so far. Oh, the VIX is up. What does that mean? Oh, the market's going down. Does that mean get short? How about the market's going down, which is why the VIX is going up, versus the VIX is up and the market's going to go down? Tail of the dog? Who's wagging the VIX? Is it the VIX wagging the market or the market's wagging the VIX? I don't look at the VIX. I know the market's going down. What do I need the VIX for? I'm just saying. I went to the other extreme. What are the bonds doing? What's the dollar doing? What about gold did this. You start putting all these elements together. What does that do? Do more inputs do anything? Or do less inputs create more clarity, even though it's still random? Because we need to make timely decisions based on a structured edge. Now, again, look where we are, and look what's hanging out in the book. Buyers. Now, the thing with this is, and we don't know, is this the low of the day? Because we're still finding our buyers here. So now, these sellers might get caught and get squeezed. And then if so, we can come back across, and then, that would be it for now. Or we get a counter rotation. These guys have finished their business. And if we get under here, then this. I still think you got to be aware of this. It doesn't mean anything other than, don't get myopic. Don't try to pick the low of the day. Let somebody else do it. My thing is, we all think, it can't go any lower. You'd be really surprised what the market can do. And the matter of fact is, or it's only going up. It doesn't work that way. The market needs to go down to go up. We need to get shorts in this market to become the buyers. Just like the buyers are in this market are now the sellers. The market goes up to go down. The market goes down to go up. What we don't know is where those extremes might be. So in the TraderLab, it's about the alignment. It's not about where will it go. It's where it might go. It might go, this is very important. So that's why it was a target on the shorts. And you notice that's kind of where we're at. This is key. Now, if we get under here, we have to see what happens when we come back in this, when we rotate, if we do. And if we get under here, maybe. I hope that answers the question about correlation. Please give a like if you like this. I'm getting a question about the variable high volume nodes in the ETH. If we have like a multiple distribution profile in the ETH, and I'm looking at it in relation to the RTH, that's an LVN to me. That's important. I will look at the high volume nodes in the ETH, but I'm looking, I don't mechanically trade anything. I look at behavior in areas. So I don't step in front of anything because I know today, as an example, the ETH was not the element. The overnight high, which is where we were opening, told me that the inventory in the ETH was long. What does the market do? The market goes up to go down. The market goes down to go up. And we got everybody long to the gills in the higher time frame. That, to me, is the ultimate opportunity. Because if we can get under yesterday's low, then you got stops there, stops there, stops there. And, I don't know about any of this, but 71 is our previous micro composite down below, and it's a naked volume point of control. All these shorts that we were taking, I was taking in TraderLab, which you guys all know about, all of this was gearing towards these stops, these stops, these stops, where the longs that are in this leg, who have now maybe we found too high, we can still come under here. Those that are going, this is just profit taking and it's going to go higher. They might be right. I don't know. Nobody has a monopoly on right. What we know is this is the biggie. And we're right there right now. There we are. And here. So this is the biggie. We can come down here into this what's called value area. So we might even come down a little lower. But this is really important. Okay? So that's it. Nothing more. And here's the other thing. You could be done, or you could be done. Me, done. And I'm not saying it doesn't mean I won't trade, but what am I doing this? I'm not doing this to keep busy and play a video game. I'm not. I mean, I know some of you are, and that's fine. This is a sweep. What does it suggest? Here. This is a short. What does it suggest? There. You want to trade this? I don't know. Why not? I don't know. Up to you. See? This is a structured trade. Do you want to trade this range? This works for me. I don't have a problem with this because it's got range. Otherwise, I'm not interested. And I only be trading it to where the buyers were. Here. See this? Support. Support. And then this. You could be done. You could just take this thing, from here to there. Nice. See you later. Or you're holding it. And then you see this interaction because of what happened here. Absorption, sweep, back here, out. Or runner, primary trade is to there, because that's where the buyers came in. You see them back in. Now we got stops, absorption, and now we can rotate or not. And then if you have a runner, you're keeping your stop out here, this outside edge, and then you can give all the MFE back and step on a rake behind the garage, or you just trade chunks. What's your plan? The plan has to fit you psychologically. It's not my plan. My plan and your plan doesn't matter. I have trouble like you have trouble. If I'm short from wherever and this thing hits this and I'm going for a target down here, it never has to get there. It can squeeze and come outside and then come back. You see? So where is your trade? If you're thinking here to there and you're done, and then we break through here and take all these out, and now you don't have a trade, you're going to be feeling emotional stimulus. And you're going to hear hide, the lunatic under the hood. You should have stayed in. Well, sometimes this is the low of the day or a counter before a counter rotation. Other times it's a bump, a pebble in the road, and we take it out. Randomness. So it isn't about the lunatic. It's about the plan. Then you need to learn to be satisfied with here, because you're ringing the register with edge. This, different. And there is another trade that might set up here, but you'd have to vet it. I'm not going to talk about it here. I don't want you guys taking it. But there's another potential short might, a continuation trade might happen, right? For this. And if we get this, interesting, right? How we doing? How about a like? And you got further questions? Yeah, Dan, one good trade a day. I get it. I just like to take the trades that show up. I don't know. You know, everybody thinks I need to know. You can't know, so you need to follow a plan that has an edge. That's all you can know. What else can you know? You let me know what else you know, because I don't know. I'm doing this 46 years. I figured out, it took me a long time to figure out I have no clue. Now, I'm not ignorant, but I am always clueless, because that means I know what's going to happen. I know I don't know. So I'm no longer in the business of being right. I'm in the business of edge. So how do I measure myself? For me is, did you follow your plan? And how about this? If I have a losing day, I do. I take a couple of stops and I'm not in alignment. I'll say, well, that's all right. You know. And then later on, if I don't trade anymore, I don't trade, and I don't, doesn't bother me. As long as I'm following my plan, that's a winning day. It isn't measured on the P&L. It's measured on the edge. If you're trading your edge, just like the casinos, you're still going to pay the other side, because the distribution of outcomes is random. Emotionally, we're just going to look at the P&L. That's not how you measure yourself. I know that's what you think and what we're all focused on, but it's not P&L. Traders are focused on P&L, have the lunatic driving the bus. And the lunatic will take you out of the business, because the lunatic is focused on P&L. A professional trader is focused on process and edge. It's a big difference, isn't it? So when you come to TraderLab, these are things we're going to constantly talk about, because the difference, and this might not apply to you, we're all special, the difference between retail traders who don't sustain themselves and traders who have that opportunity is how they look at what they're doing here. What they're doing is they're looking at edge. They're looking at this as gaming. They're also understanding that in any business, there's cost of production and overhead, which means we pay the other side. Casinos pay the gamblers. They don't get upset about it. They don't change the game. They deal the next hand. What do? Oh my goodness, I've taken 2 losses, and now we're fearful. What does the last trade have to do with the next one? They're all unique because they're all random. They're unique. And what does it take to put the next trade on after you take a stop, when you're still mentally in the last trade when the next trade shows up, but emotionally you're attached to the negative outcome, so now you don't take the next edge, which may be a winning or losing trade. How do you get the edge over a large sample size? You've got to take your trades, even if it means you hit your loss limit, and your fear is going to keep you from taking the next trade, right? What do you think the biggest obstacle is in trading? It's not learning how to trade, guys. You come to TraderLab, I believe, if you do the work, and I'm saying work, there is no plug and play. You can build a business. That's up to you. Remember, important, remember this: helmet, watch, not a trade recommendation. If I can get under here, these buyers, and you can see them, these icebergs, and there was quite a lot here. Look at this. So we've got, over 1,000. We got a lot of buying here, but that doesn't mean it won't go lower. But we have to be and why is this important? This liquidity, these buyers, look at the sell stops, 2,000. I guess the longs are having a little indigestion, don't you think? This is very important. Let's see what it does. Remember this, okay? Very important. So you could be taking shorts here, scaling here, and then you're either done, remember, or you're hanging out because you're playing the game for the fuel. The market goes up to go down, and the market goes down to go up. Let me ask you a question. Have you seen much in the counter rotation area or the squeeze? Do you think it is not the longs in control at the moment, but the longs are liquidating and the shorts are taking advantage of the counter rotations. Now remember, the market can find the low of the day or a good counter rotation at any time. Not our issue, because we don't know about that. What we know is at the moment the buyers are just not getting off the deck. All you need next is the referee to throw the towel in. Is this making some sense? Casey Kasem from New York. Fairfax, the levels. Well, I put these in manually. These are automatic. They're come out from Investor RT. It exports these, and as everything changes around, the intraday levels, they're updating in real time. And this is called Cloud Note. These are manual. I put them in. I got to put some in, by the way. I'm getting lazy. Too high. See how it lines up? I'm not paying that. Get out of here. Okay, look where I am. Now, do I know it's going to do that? No. What do I know? I don't see my buyers. I see sellers taking advantage of counter rotations. I'm now below a key level. Now below this. What does that suggest? And outside day, maybe. Right? Outside day is kind of important, don't you think? Those of you who are... now, what are we going to do? You ask. Let's see what we're going to do here. This, resistance. Outside edge. Low volume node. Too expensive. Get out of here, Tom. Okay. Support. Break. Now, this is something a little different. When you get below this is resistance. Now, do you have a way into this? Maybe. But let me show you microstructure again. And now these are not recommendations. The whole purpose of me doing this stream is to help you understand market mechanics. How does the market work? Why does it do what it does? Now remember, this is too high. Break. Now where did this come from? Oh, this is the high volume node. That's right. So this is my resistance. I break. My sellers now got through the buyers. I pull back. This right here is an auction. Too high, too low. My buyers are there. My sellers are there. My sellers get below my buyers. That's a trigger. The micro high volume. You can kind of see it. Now this is really advanced. So see where this line is right here? This is your high volume. That's your trigger. So you could be short here. You could be short there. Your stop would go there. Scaled. And where you're trying to go. Lower. That's about it. It's not more complicated than that. Just remember, it's random. Okay. Final questions. I got a minute. By the way, if you find this useful, if you're interested in this kind of trading, this is not complicated. The market is random. That'll make your head spin, but that's normal. Simplicity in trading, guys. The remove redundancy. Watch my primer webinar. It's available in the TraderLab as well as the TraderLab community. Use the link in the bottom of YouTube. There's no cost. This is what the TraderLab community looks like. There's a lot going on in here. There's also a library of webinars. Thanks, Ned, for curating this for us. This one has about 34,000 views. It's a primer webinar. Also, take a look at this one. Are you trapped in trader Groundhog Day? Working hard, waking up in the same place. And the other thing here is stop gambling, start winning. You can use the link in the bottom of YouTube. There's a document section, as well as the library of webinars and a lot of additional education that's available in the Bookmap server, stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. Don't forget to give a like. Thanks so much for visiting the TraderLab today. Remember, TraderLab is a community of like-minded traders who've come together to leverage their collective experience. It's a serious community. It's about the business. If you're interested, use the link in the bottom of YouTube. There's no cost, and I look forward to meeting you in the lab. Thanks again, guys. Have a super day. And remember, if you don't have a plan or an edge, you're gambling. And I always think it's better to sit on the house side of the table versus sitting with the gamblers. Thanks, guys. See you soon.